So thanks guys for doing this. We appreciate it a lot.
Yeah, no, thank you for having us. I think we really wanted to touch on four points today that we've been seeing anyway that's been changing in the past 8 weeks. We thought we'd keep it more of an open discussion just because it is changing every day. It's not, there's no set rules. There's no hard guideline to what's going on. So we're just kind of keeping it open. If you have any questions, either interrupt us or type in the chat on the side, whatever's easier for you. But really we're touching today on income, risk to the banks and lenders, how we're doing appraisals now, and then also signings, because again, we're not meeting people really face to face anymore. So I guess those are the 4 key points. And if you have any questions kind of when we're going through it, just stop us right in the middle. Again, type in the chat or just start talking and then we'll answer as we go. So I think the first point we want to touch on is income, because income's been a big one for everybody who is currently, how you doing, Mr. Murray? Just came in there.
Hello.
And so income's the first one we really want to talk about, because that's really the main point that everybody's being affected with, is obviously losing their jobs, being laid off, people on CERB income, etc. So the banks don't use CERB income. So if somebody is laid off, they won't use the CERB income. So that's not the use for mortgage qualifications. If people are laid off, generally we can't use their income either, not even if they have a return to work letter or whatever it might be. So if people are getting laid off from their employers, that's income we can't use anymore. Now, a lot of banks and lenders have become really good at coming out and saying, hey, if we already have a mortgage approval in place, if we've already signed off on the income, we are not reopening that file before closing to make sure if the clients are still working or not. So they are not calling the employers the day before closing. They're not asking for updated pay stubs. Once they've signed off on that income, that's it. We're not looking at it again. They know very well what is going on. They don't want to open up a can of worms. So a lot of the banks and lenders, all the banks and lenders that we've worked with anyway, have come out and have said, this is not something we're doing. We're going to just satisfy the income up front and then move forward from there, and not have to reopen the files and potentially cause issues on closing or before closing on firm deals. So that's kind of the key, I guess, the first key point. The second point with income is really comes down to industries and where people are working. There is some industries that are obviously affected, and self-employed. So really the banks money is not being lended any less. They're just being a little bit more due diligent on, or doing the due diligence ahead of time on the approvals to really hone in on the income and be able to tell people, where's the risk on the type of industry you're in or the type of employment you have. So that's really the only changes we've seen to income. So obviously, bar staff, hairdressers, dentists, occupations where we know are shut down or they know are shut down. Those are generally where you're finding the issues. Or industries that are very shaky right now, like the travel industry, certain companies that, might be publicly announcing hardships. So that could be an issue when the banks are underwriting. But in terms of income, that's really more or less what we're seeing. So again, banks are still lending money like they usually would. They're just being a little bit more careful up front on the type of employment. If you're self-employed, are you still working? Are you still generating income? How has your income been affected by COVID? These are all answers that we have to or questions we have to answer up front now, where we really just have to, again, touch the points on, are we still working? How are we being affected? Is our income gone down? There's a lot of people that are still working but are on salary reductions, and that's totally fine. But the key point is, are you still working, and how has the income been affected moving forward? So I think Jack can touch a little bit on that too, on what he's seen.
Yeah, not much more to add on that, but certainly, the number one question is, are they working now? That's, and how are they being paid? A lot of people are on 80% reduction, not 80%, 20% reduction on their income. So we're really spending, much like we did in the past, asking the right questions. How are they employed? Are they still receiving full income? And we're looking for confirmation of 2 most recent pay stubs, things like that. The other key thing is about sources of income. Cyrus didn't touch on this, but we're now using child tax credit, which can make an application approved a little bit easier than in the past. Some of the child tax benefits are larger now, so we can utilize that. A lot of lenders have come on board. again, just on other sources of income. So if some people have a regular salary and they have another part-time job, we're getting copies of the T4s up front as well. So it's just, we are asking those extra questions around the income side of things for sure.
Yeah, so child tax benefit, just to speak on that, we've always had lenders that use it, but we've really had pretty much everybody come on board now with using it. So all the banks are pretty much on board with child tax benefit, all the lenders. It only used to be a very small select group of lenders and banks that did it, but now across the board, it's everybody's using it, so that's great. If you're on a salary reduction of, let's say, 20%, they can only use the reduced salary amount. They cannot use the full amount, even if you're being topped up by the government programs or whatnot. So whatever your base salary is of what your employer is paying you, that is what they have to go by. So those are the kind of things that we're seeing. Another thing is, obviously, there's some professions out there that are very high paying but have been affected. Dentists, that's a big one that we've run into where they're closed. Obviously, their practices are closed. They can't do anything right now. So technically they have no income. So that's a example of someone who is self-employed who technically right now is generating no income. So that's one that we have to, anyway, those industries we're just careful of, and I'm sure everything will get back to going here soon. But right now, again, it's ever changing, but right now everything is still technically closed, or some of those practices are still closed. So, and I think the second thing we want to touch on is risk to lenders. So that really just ties into income. So they're just being a little bit more careful on clients who, oh, I think you got a question here. Does the person that's currently on a mortgage deferral get affected on a new purchase? Yeah, absolutely. So if you're taking a mortgage deferral, you're claiming financial hardship. So you can't be asking for a mortgage deferral on your existing property and then turn around and say you want to buy new property, because the bank's going to turn around and say, well, okay, well, number one, are you actually in financial hardship? Why did you claim for mortgage deferral? So those are all questions that, again, you just have to be, we got to be mindful of and ask ahead of time. But yeah, if you've claimed for mortgage deferral on a mortgage that you currently have and you're trying to buy a new property, it's going to affect you. It just depends if the bank finds out or not that you're in a mortgage deferral, but that's not a good situation to be in while trying to buy a new home, because you shouldn't be buying a new home if you're in a financial hardship situation where you're asking the bank for, leniency on your payments. So
Cyrus.
Yep.
You might have covered this, but I had to step away a few times to deal with crazies. So when you're getting mortgage approval, and you say you're on CERB for some reason, and is your approval based on what you're getting from CERB or what you had as a salary prior? Because or at all.
Either. Yeah. So if you're on CERB, we can't use your income because they can't use CERB income.
Okay.
And they can't use your salary before CERB because you don't know when you're going back to work. So technically, we can't
buy.
You can't buy. And I have situations where clients have accidentally applied for CERB income even though they were working. And we're going ahead and we're showing down payment documents, they can, the bank see the CERB deposit. And they're like, well, why did the client try to claim CERB income? And then we have to explain, obviously, it was a mistake or whatever it might be. But yeah, here's another, I guess, example for you as well. Important to get documents up front. If you satisfy the income, but then you show down payment, maybe like 2 weeks before closing, and you're showing the bank statements, and all of a sudden the lender sees CERB income pop up, they're going to ask a question, right? They're trying to turn a blind eye to it. They don't want to go out of their way to find an issue with the employment or call and find it.
But if it's front and center, then there's really just no way around.
If you're looking at your bank statements and your down payment is being accumulated from some CERB income, they're going to ask what's going on, right? So that's what you have to be careful of. We're trying to get everything up front, satisfy everything up front, so that when we're going firm on deals, there is no conditions outstanding. We are firm and the deal will close without any issue, because you just don't know who's going to get laid off and who's not, right?
Okay.
Yeah. So the second thing was risk. Is we're really running into CMHC in particular. The insurers are coming back and they're being a little bit more hard on lower beacon scores, especially clients who don't have a lot of money saved up. So if you have a client, I'll give you an example. I had a client who makes excellent money. She made about $150 a year, but there was no savings. Even though she can afford the house 3 times over, CMHC would not approve the deal because they're saying, well, she makes this much money. She has a little bit of a weaker credit score. Why does she have no savings? What's her fallback position? If she loses her income, there's nothing there, right? So she doesn't have any position where she can, float herself for a couple months, et cetera. So this deal 3 months ago would have gotten approved, no problem. Now where, employment and, income is so shaky and you just don't know where it's going to be in a couple months, the CMHC is really cracking down a little bit on saying, hey, what's the risk on this client if something happens to their employment, right? Do they have money saved up? Do they have assets? What do they have? If they're just floating by and just making their minimum payments on their bills and their sorry about that, and their car payments, then it's a little bit tougher if they have a weaker beacon score, right?
I just put this on as a little chat, but I'll ask it as well. I know that if you're back to work, which is great. Do they look at your employer? Meaning you're back to work, you're working full time, but you work for a harder hit industry, gym, restaurant. Oh, sorry, I'm going to move rooms. Something like that. Are they going to go further and sort of do a deep dive and say, well, you're not at risk, but because your employer is at risk, you are in turn at risk?
Yeah, so definitely. So if you're looking at, depends on, again, the employments, the airline industry, travel industry, restaurant and bar industry, all those are situations where, even if you go back to work, there could be questions about the industry. Lenders more than ever, into the type of employer that you have. They're really Googling the employer, finding out everything they can, finding out, have they claimed any issues.
That's what I was wondering.
We've seen that. I've seen issues where, the employer has had a publicly filed lawsuit, or maybe they've been involved in some cases where the lenders and banks just don't want to be a part of. So those are also situations. They Google. I want to say they don't Google everybody, but they will.
Oh, listen, I've experienced situations where you've had to track down the employer via LinkedIn to affirm that they are actually a larger than they, you go and you check that their websites aren't large enough or what have you. And so you have to find them on LinkedIn and find all this type of stuff. And I don't remember this happening prior to COVID. So I don't know if it's COVID specific or if it's just that the climate has changed. But definitely I find it fascinating that it's no longer necessarily just the strength of your employment, but your employer and their sort of, ability to sustain in the industry.
Well, Jack and I actually run into this a few times where, it'd be on 4 pages of the Google search of the client's name, and they've been charged 5 years ago for, possession of marijuana or with the intent to traffic. And we ran into that where, again, it was page probably 4 or 5 on Google, and we didn't know. Obviously, we're not looking at, we're not Googling the client and going that far into it, but the lenders.
Job application now.
What's that?
It's more like a job application now. Like the due diligence they're doing, only part of it has to do with your actual income, and so much more has to do with the sort of whether you fit a proper profile for holding an asset product.
Yeah, and it really comes down to, again, the risk the lenders are trying to assume. Yeah. I'll be honest with you, right now you're in a situation where people are on mortgage deferrals, and that's all fine and whatever, right? But what's going to happen is you'll see the effects of what's going on with COVID, not right now, but maybe 3 months.
That's what I've been saying.
When the mortgage deferrals stop, when people can't defer their payments, when maybe the CERB income stops, and whatever it might be, that's when you're going to start seeing people and banks experience a much higher rate of foreclosure. But at the same time, we don't want to instill fear, right? I feel like a lot of people like to throw out articles out there that say, oh, CMHC is raising the down payment from 5 to 10%, et cetera, et cetera. These are all situations where it's all speculation. Nothing is firm. Nothing is, even if it does come out and they do change the down payment from 10%, it's not going to be tomorrow. It's going to be a while down the road. So these are all situations where, again, it's ever changing. The banks are definitely assuming a little bit more risk, but you just have to kind of ride the wave and see where it goes. But I mean, the effects will be long-term more than they are right now, for sure, right? The harder, everybody get harder hit a little bit down the road. So
I'll just add to Cyrus and I, we've been joking about this for the last 2 months or 3 months. Because of the underwriting is so diligent now, we call ourselves not just mortgage brokers, but underwriters. We're really looking at the file with a different set of eyes these days. And funny enough, him and I have exchanged documents a few times. And I was like, can you have a second look at this and see what you're looking at? It's really called KYC, know your client. And I get a fair amount of leads from Google, and the questions that I get asked now, like, well, how did the client find you? What's the relationship with the client? And basically, where's their down payment? Why are they moving to Halifax? And it's really asking these questions that we never asked before. As Cyrus pointed out, it is a different world. So we're finding ourselves asking more questions, which is, and getting more documents as we did in the past. But it's really finding out and discovering some clients have changed their last name as well. And we have to prove their identity a little bit more than we've had in the past. And this is all part of this risk assessment that we're responsible for. And it's not always driven from the bank, but there's a higher up party, the superintendent of financial institutions. They're basically dictating this back to the banks. So we're really following, it's more B21 rules, but yeah, so it's, I guess to kind of short and sweet, it's really about knowing our client and protecting the risk. And they're looking at, the last point was around this cash reserves. You know, what if another situation happens down the road? What's the fallback? Are people, you know, over 1 million people applied for mortgage deferrals on the first week. So the bank's going to look at that, what if we had another situation, what are they going to fall back on in terms of cash reserves? So I'll leave it at that for now.
Yeah, and a lot of stuff that we were dealing with in the first couple of weeks was panic calls or people just trying to get deferrals in the mortgage that did not need it. And that was really what we were trying to put out there, was that if you don't need the deferral, do not take it. You're going to pay more interest. It's going to get tacked on. You're going to have more years on your mortgage. So a lot of stuff when all this actually first happened, it was a bit of a mess for sure for the first couple of weeks where everybody was trying to kind of handle the volumes and what was going on. But yeah, it's been, again, it's ever changing. Really kind of speaking to our third point, I'll let Jack start with this one, but where appraisals have gone, I know that's kind of a big question. So I'll let Jack take this one for.
Yeah. The good news to this, and we've had great success, is that the appraisals are still happening. I had a few calls actually from your office this week, and just how are they being done? Well, it's still business as usual. So the appointments are still being booked. Basically, not every client, there is an option. They call them modified appraisals now, where most lenders are allowing the appraiser to go to the home, do exterior pictures, and basically still do the full report, but they're actually working with the sellers to get, working with them to provide pictures that they can send along to put in the report, which is actually, in some cases,
it's probably
deals. Yeah. Values have actually been higher to some degree.
Well, it's definitely saved a couple. I mean, I'll be honest with you. There's a couple houses that we've done that, I'll be honest with you, if the appraiser probably went in there himself, maybe would not have, the bank wouldn't finance the house. But because the seller taking the picture, obviously the seller's, I guess you could call it a bit of a conflict of interest, but at the same time, I mean, this is how they're doing it. So the appraisers will go outside, take the measurements, take the photos, and then they're asking the sellers or the seller's agents to provide the photos for the interior. And really, I mean, it's to our benefit because we're getting good photos and we're not seeing the bad, but it's that's kind of how the appraisals have gone now, right?
Poor appraisers. Like, I actually had a conversation with an appraiser this morning who called about one of my properties wanting to get in. And I took the opportunity to ask him, and this is, less about CERB and more about, or about COVID and more about the seller's market, right? And I said to him, how are you guys handling this? Because God love you. You're getting these values coming in that are so high. And he said to me, now past sales are only part of it. We're looking at projected future, and we're also looking at the activity. So if the property was listed at a certain price and it went, 15 or 20 grand above, well, if there were 10 offers, that means the market is calling for it, right? Like, regardless of if we have a comp to put it against, if there was that kind of activity, then it's telling us that the market is trending there, which I think is new. I don't think they ever sort of evaluated homes that way before, in our market anyway.
Yeah, it's definitely been a situation where, to be honest with you, this is our busiest June ever. I mean, it definitely is. Yeah. It's been the market is still going. People are still buying homes. People who are qualified to buy homes for the most part are still buying them because of their employment has not been affected. So I mean, again, I still think we'll see a bit of a dip come maybe July, August, September, but for right now, it's still good, and hopefully it still continues. But I mean, Halifax is a little bit different than the other markets right now, right? So Toronto, Vancouver, again, the issues, a lot of decisions come from CMHC down are driven from the bigger markets. They can't say, well, in Halifax, we're gonna do this, but we're gonna do it this way in Toronto. It doesn't really work like that. It's kind of it's done from the top down. So They just have to they make the rules to adjust the bigger markets. But, you know, Halifax is still, from what we're seeing, pretty healthy, right? So no big complaints.
I haven't seen too many issues with obviously multiple offers situation and the appraisals being done. I haven't had any that have come back. The values have all come in, even though it's over asking price. So that's a good sign of the market stability, I would say. So I haven't seen it. Cyrus, you haven't seen any? I'm not too many that come back.
Yeah, the values are coming in. We're getting values definitely where we need them. So it really hasn't been an issue. So no, I haven't.
Can I ask you a question about multiple offers? Sorry, guys, I know I'm asking a lot of questions, but I find this is when you're a listing agent, it's kind of really important to sort of know some of these things. Like when I get a multiple offer situation as a listing agent, and I have different similar properties or offers rather on properties, to me, what I want to know is financing affected in any way? Right. So I know that a person that's coming to me with like a pre-approval letter or something, I know that it's all sort of with a grain of salt kind of thing. But really somebody that was pre-approved, 3 months ago, so my question that I ask the agent is, has COVID affected their employment? And do you have any type of pre-approval in any form? Is that something that you guys are doing, or do you think that it's smart to do that or anything? I'm doing it because I feel like it's the only thing that I can do to protect my client. But I don't know, do you feel that it helps in any way?
Yeah. I mean, absolutely. I mean, you have to ask the question, right? A pre-approval 3 months ago does not hold the same.
Exactly.
Right. So it really just depends on how the client.
Should we be getting our clients to update their file, maybe getting a new pre-approval letter if theirs is older?
You could. It really depends on, I mean, clients should know. Again, some clients just like to play a little bit into it, but clients should know. I mean, your pre-approvals are not solid. Pre-approvals are not firm. If you were pre-approved 3 months ago and you lost your job, it has nothing to do with the actual approval process. Because when you go to actually get approved, you have to show your income documents again. You have to get everything. So it's not, a pre-approval is not a situation where it's like, oh, I was pre-approved, so no matter what happens to my employment, I'm fine. It doesn't work like that, right? Because pre-approvals never go to CMHC. They never go to, really don't even go to underwriters in general. Pre-approvals
I want a letter, and I want it to be recent, and I want it to say that they're fully pre-approved. Again, I know that's only worth so much, but when I'm looking at 5 or 6 different offers, the person that has that is going to be the one that I'm going to feel more comfortable with, very likely.
Absolutely. No, I agree 100%.
Yeah. We all know with these pre-approvals, most times they're just rate holds. So, and they haven't done, their homework on the file, looking at the income up front. Especially since March 25th, the rules have changed on how we, anything that was pre-approved prior to that, obviously the old rules exist. But now going forward, if the clients don't have their updated employment letters and pay stubs and all the things that we need, it's definitely, this past week, I've got a client in, he thought he was pre-approved at True North. And basically went out and wrote an offer, and technically he wasn't. With the income to debt ratio and asking how he was actually paid, they plugged in his income of X amount, but his income wasn't driven from that. It was actually from 3 different sources. There was child tax credit, there was his employment, and then there was maybe some rental income. And all they did is plugged in his 50 grand. Well, he doesn't make 50 grand. He's got rental income and child tax credit. So that's where our job as brokers is asking those questions to find out, back to our point number 1 of how does the income coming in each and every month. And it makes a difference. That individual would have not qualified at True North. We brought him back in, and basically his price, in this situation, his pre-approval dropped to about $25,000 in this case. So,
yeah, and a lot of times too, and pre-approvals are really only as good as the person doing them.
Yeah.
That's the thing.
Yeah, so it's making sure we get the documents. Every pre-approval, we want everything up front. I want to see your income, your down payment, the full 9 yards, because we don't want to run into surprises when we have to submit this for a full approval, right? So a pre-approval, we try to treat it as much as we can as an approval. I feel like from the volume of deals that we do see, we do really become underwriters. So we know what they're looking for. We know the questions they're going to ask. So we're just going to ask it up front, because there's no point in us just sending it in and then them coming back with the questions we have to ask anyway. So we already know for the most part what they're going to come back with. And if there's any, issues with the approval or the pre-approval, we like to make that known up front. and just kind of keep the agent in the loop as well to say, hey, listen, these clients technically are pre-approved, but here's the issues that they might run into on a full approval. Here's the issues that CMHC might have. Here's the issues that the underwriters might have when they start digging into the file. So that's really the two, the main points in a pre-approval is it's not solid. It's again, as good as a person doing them at the bank or the broker, right? It's really no different. You just have to make sure that you're getting your ducks in a row ahead of time. So I think the last point is signings. This has been a big one. Everything has changed obviously to online. So you used to not be able, for the most part, to sign mortgage documents electronically. So now all the banks and lenders are on board with electronic signing. So all our signing packages, all our mortgage documents, consent forms, everything, we're doing them electronically. DocuSign, Sign Now, Dot Loop, etc. We can use all of them. So we've been adapting everything for that. So that's actually been a pretty big win in terms of how COVID has affected the business, because we used to have to meet with every client to sign, where now some clients, maybe they don't live here, or maybe they don't want to, make the trip out, or maybe they just rather sign from the comfort of their own home, right? So this has been a pretty good, I guess, positive. The second thing as well is some lenders and banks have adapted kind of out-of-country signings, but only for Canadian citizens. So TD Bank will allow clients now to sign, on our end anyway, will allow them to sign in a different country as long as they hold two pieces of valid Canadian ID. So that's been a big win for us, because a lot of times clients have to come back into Canada to actually sign with the lawyers, but they're allowing them to sign out of country, even with the lawyer, as long as they can provide proper documentation surrounding the fact that they are, Canadian citizens, or passports, Canadian passports, driver's license, bank statements that might show Canadian address. So that's been a pretty big win. So we run into that a couple times where clients have literally been I had one that was stuck in Qatar, and there was no way she can get back for her closing in May, because even if she came back, her country, they wouldn't let her back in. So it was a situation where rules change based on situations, but that's been a pretty big win as well. So
good point. I have a current client now in Spain. It's actually an alternative deal that we're working with, and all the funds are coming through non-Canadian bank accounts, but they are non-residents. They've been working abroad, but they won't be here for closing. But it's a very unique situation where the banks have adopted both the digital world of signing and then allowing the lawyers to do their due diligence as well. It's just amazing. I've probably sat on 20 or 30 different conference calls with the executives of many of these lenders, and they had spoke to the rapid change that has taken place in the 90 days of our business. It's never happened. And it's amazing to see how fast it can turn when things like this has happened. So it has changed our business, I think, for the better, certainly with signings and the flexibility on what they will do with the appraisals. And obviously they're still assessing the risk, but the fact that we're in a digital space, you guys were in Dot Loop years ahead of us, and we were still waiting for that. And in this appraisal business, what they were going to accept, we all know that anybody that's on the call or no bankers, it's a very slow process. And what we were able to do in 90 days, it's history in the making, because that didn't happen before. So we're really pleased with what the banks have adopted to. We'll have to see what's coming in the future as these 6 months lapse of the mortgage deferrals. That will probably change some additional requirements, but for the most part, like I said, it's been our busiest time given the situation. We're going to have our busiest month next month in the history of my 16 years. So it's hopefully that's a sign of things to come.
Yeah, and just quickly to touch on, just because Maggie asked a question here about rates, I do quickly want to touch on this because obviously rates have been all over the place due to COVID. One main point, and I see this all the time, Bank of Canada prime rate does not have a direct impact on fixed mortgage rates. Fixed mortgage rates are derived off the bond yields. Prime rate is something else, right? So when Bank of Canada adjusts their prime rate, that only affects variable mortgages. It doesn't necessarily mean that your fixed rate is going to drop by a quarter point or go up by a quarter point or whatever it might be. So rates have been all over the place. Bank of Canada prime is now 2.45, so it is very low. But just keep in mind, fixed rates are very low as well. But as soon as this whole pandemic started, they jumped from, low 2s all the way up to almost 3%. And then they came back down again once everything started to level off. So it's important to, it's a good time for buyers to buy because, again, the rates are so low. But whatever Bank of Canada is doing with the prime rate does not necessarily mean that the fixed rates are affected in the same way. So that's something that we've seen a lot. As soon as Bank of Canada drops the rate, we get calls saying, hey, is it my mortgage rate just down by 25 bips? No, it did not, because the fixed rates are a completely different beast than the variable rates, right? But it's hard to predict what's going to happen with the market and what's going to happen with the rates. I think they're going to stay the same for a little bit for sure. And I don't think we're going to see an increase at all here soon, but it just depends. I mean, fixed rates usually go up when the market does well. So for right now, I think everything's going to stay pretty much at bay for the next few months for sure anyway. So I think Jack, you want to add anything else to that, you think?
No, I mean, obviously the rates, they're really low. I mean, we've seen some specials that just come out this morning at 2.29 and 2.34. I mean, that's incredibly low rates. So, we have the rates. Obviously, we hear your challenges of inventory is low, but these are Cyrus and I are lucky enough we have a client base that we can work. We're trying to convert many clients that were from 2018 and 2019 that were in at 3.29 and stuff. We're actually moving those clients out and getting them a 1 point below discount. So either yourselves or clients that that are paying that 3% or higher, literally the rate is 1 point lower than that right now. So yeah, we're having lots of discussions around that.
Yeah, it just depends on, again, situation and where the clients are. But for the most part, rates are really, really good right now. So I think that's pretty much it unless Jack, you want to add anything else, do you think?
No, just a reminder, we continue to talk about these programs. They're out there. We are utilizing them every week, but just in case you forgot, just the Nova Scotia Down Payment Assistance Program, they still have tons of money. We're utilizing that program where the provincial government is providing the 5% down up to $280,000 on the purchase price. And then the shared equity plan is still out there too, where the government is matching the 5% as well. So those two programs are great. We have a cashback program as well now. So there's all kinds for closing costs. So those three programs are front and center, and just to kind of put that at top of mind for you guys.
Yeah. Any questions, concerns, anything that you guys are seeing that you might want maybe addressed?
Good answer.
Pretty much. I think
we covered them all, maybe.
I hope so. So if you have any questions, always reach out. Again, we literally work, I just want to say 24/7, but that's not really a joke. So if you have questions, you can always reach us evenings, weekends. We're always available. Oh, here's a question. Is it more difficult to get the NS down payment assistance now? It's not. It's just you still have to qualify based on the old rules, in the sense that to get any kind of borrowed down payment mortgage, you do have to typically be a good credit, good income client. It's not meant for the clients who have, a ton of missed payments and they just haven't been able to save money because they're shoveling it on credit card debt. It's meant for clients who just literally have not been able to save a big enough down payment. So in terms of it, is it more difficult? No, it's just, it always hasn't been super easy, just in the sense that you have to have, again, you got to have good credit to have a borrowed down payment is the main point here, right? So you can't have bad credit and try to get a borrowed down payment. Just doesn't work. What discussions are occurring regarding the second wave? In terms of financing, nothing right now. It's kind of hard to speculate what's going to happen if there is going to be a second wave, and if there is, how it's going to affect financing. But it's really, right now, they're trying not to look too far in advance and just kind of, I guess, just see where the market goes. But for now, there hasn't been any discussions on the financing side in terms of a second wave for COVID at all. So that's pretty much it. Yeah, perfect. So if you guys, again, if you have any questions, just reach out to us directly. We'd love to help, but I really appreciate everybody tuning in.
Thanks for